Hello, everyone. My name is Alexandria Reeves, and I am here to talk to you today and share with you how to do exercise 5, I believe that's what it's called. How to do exercise 5 from chapter 3 today. So I'm going to share my screen with you here for a second, and we're going to walk through this exercise together. Yeah, so just one second. Okay. So we start out our question with this information here that you're seeing, where we see assets equals liabilities plus stockholders' equity, as we learned from the basic accounting formula. From there, you can see here that information is for cash, accounts receivable, supplies, equipment, accounts receivable, common stock, and then retained earnings, which are broken up into revenues, expenses, and dividends. So what I did here is, instead of just showing it through you on Wiley Plus, I'm going to show it to you here in an Excel spreadsheet so that you can see the different pieces of information here. The first thing that it asks for us to do is to come up with an income statement to be able from this data set that we're given here. And income statements are divided into a couple of different pieces. So here you can see you have the name of the company, which is the first thing that you put within an income statement. Second is the type of statement that you're making. And so this is an income statement, obviously. And the first piece of information that it will ask you for is for month ended, for year ended, or for I believe the other one is just says August 31st, 2017. I had to put a period here because Excel made me in order to leave it there nicely. So, and the reason that you do it for the month ended is because you're creating an income statement at the end of the month per the instructions. So the first thing that you have to make sure that you fill out within an income statement is always revenue. Revenue is always the first thing that you report within an income statement. The reason for that is because if you don't know your revenue, then before your expenses, then you won't get an accurate number for what your net income will be. So as a result of that, that's why revenue is there first. So the only revenue, according to the information here that we have, there is not revenue up here. Well, sorry, hold on a second. The revenues that we have here that would be included would be this service revenue right here. Underneath this revenue portion right here, there is service revenue here. So that is why we call it service revenue. And as you can see, it's $10,500. So I'm going to take that, and that's going to go here. So 10,500 is going to be what we go have for our service revenue. Other than that, that is the only revenue we have that goes within this income statement for this specific problem. From there, we are left to go to expenses for it, because once we have our revenue, in order to realize what our net income or loss is, we need to know what our expenses are as well. So if we go back to the information, we're going to look at this and see here that we have 3 expenses here: rent expenses, salary expenses, and utility expenses. So rent expenses are $810. Salary and wages is $2,700. And then utilities expenses is $360. And the best way to usually do it on a sheet is top down on the sheet, because most often on the income statement is top down, as that is how it is listed from top to bottom within the statement. Or if it was in a different type of piece, such as an asset, it's from cash, which is your easiest to convert asset, down to the least easy to convert asset into cash. So total expenses here, we're going to add these 3 together. So the total for those 3 for total expenses is $3,870. And in order to get net income, you're going to take your total revenues, which here is this $10,500, minus the $3,870, giving you a total of $6,630. And that is how you fill out an income statement according to the information data set that we were given on Wild Horse Company. From there, we are asked to take this net income information here, this $6,630, and place it into a retained earnings statement. The retained earnings statement is important in this as well, as it is the second piece that we'll be filling out. It is a financial statement that summarizes the amounts and causes of change in retained earnings for a specific period of time. And for this specific period of time, we are looking at the month of August, which is important information as we move forward. So with the retained earnings statement here, again, you'll see the same thing as the company's name is always at the beginning. Excuse me. And then the type of statement is here listed. And then the first piece of information that you will again list, the same as you did for the income statement, is for the month ended August 31st, 2017, because it's not for retained earnings for the month or just the day of August 31st. It is for the entire month ended August 31st. So for that, the next piece of information that you will need to fill out and know is that retained earnings at the beginning of that period are what you're going to be looking at first. So if you were looking at an entire year and you were doing it at the end of the year, December 31st, what you would be putting in this spot is retained earnings for January 1st. So here, because we are going off of the month timeline, what we're going to do here is we say retained earnings for August 31st. For that option there. So the retained earnings for August 31st, if we go back to the information here, we look here and we see that there is nothing outside. This says retained earnings here, but the retained earnings we actually have is this is the data we have at the 31st of the month. So according to that, we assume and know that that retained earnings for August 31st is $0 that was left in the business from previously before this month occurred. From there, you always want to start the same with how you did with an income statement. You always want to start with the money you have before you minus things out. You're going to do the same thing here. You always add first. So that's the second spot here that you're going to be filling out is this add portion right here within your assignment. And the add is you are adding net income. And the net income or loss, where you get that is here from this income statement. So we're going to take this piece of information, because this information is all based on the same numbers, and take that $6,630 and place it here within this spreadsheet. From there, you get a total here for this spot right here to just make your numbers easier if you did have something here. So this answer here is 0 plus $6,630 because we're adding it. The total here is $6,630. From there, we are going to less out dividends, since that is what we will be paying out to shareholders in this specific situation. So if we go back to our information and see if we can find dividends, here we can see in this formula, here is dividends right in this spot right here. And the only thing listed here in here that matches up, so there's nothing else here, is just this piece here that is for $3,000 given to dividends. So we are going to put that here in this. As a result, we are going to minus, and so to get retained earnings for the full month, we're going to take what net income we have, minus or less dividends, which is $3,000, in order to get $3,630 for retained earnings. From there, we will go to the balance sheet. The balance sheet is where we record assets, liabilities, and stockholders' equity. Much like they talked about in the formula in the information that we all know very well. So we're going to go there now. Same thing here. At the beginning of the balance sheet, what you're going to be doing here is taking the name of the company, which again is Wild Horse. This is where we're taking all this data from. And then the name of the statement or sheet, which for this is a balance sheet. And this is actually what the reason here, what we will be doing here is doing a balance sheet for August 31st, 2017. So this is what our current balance looks like for August 31st, 2017. In a balance sheet, you always want to make sure that you are placing assets first, because same thing. And before we can know what to minus out of a certain equation, or what we're equaling out, we need to know what our positives are as far as from an assets perspective before we get to what we are liable for. So after we inherit to assets, you always want to start with current assets being things that can be converted to 1 year or less. So current assets here, we're going to look at this here. And what we're going to do with current assets is come here and start, current assets, this is actually blank, apologize, with no fill. So because this is just a header. So the first current asset that you always place, because the way, as I explained before, the first thing that you always place with underneath current assets in their order is the most convertible thing to cash, or cash first, all the way down to the least convertible thing to cash. So in this example, we do have cash. So we're going to go back to the information page and look at the cash information here. So we see here that there are 9 different pieces of information here when it comes to cash. So as a result of the cash that we see here, what we would do is we would do the 21,000 minus, and so add all of the positives together or down linear, whichever is advantageous and preferable to you for that information, and then minus out from the total that you get from that. And the total that you should get from that is going to be $15,720 total. From there, we're going to go back to our information sheet and look for the next most convertible asset within our information. So once we have cash, the next most convertible thing, this spreadsheet actually makes it very easy, is going to be this accounts receivable tab, which is where we are going to take, again, the same thing from going top down, take this $5,600 minus $360 in this eighth, in this -8 right here, and that will get us to accounts receivable. Therefore, accounts receivable here will be $5,240. From there, the next best piece of information that is easily convertible into cash is going to be supplies. Since we see here, we already covered cash, accounts receivable. The next piece we're going to be covering is supplies. So we can see here there's no minusing out or adding that we need to do here since there's just one data point entry. So we will be entering in $900 within the supplies section here. Oops, not $990, $900. I'm sure nobody would mind an extra $90 though, but for today, we're going to leave it at 900. So from there, we're going to go back to the spreadsheet and see here that we don't have any other current assets because equipment is not considered a current asset. It is considered more of an outside longer term asset, since that's something you hold on to for a longer period of time than for 1 year, as that is what is current asset is defined as. With the equipment, we can see here it's $4,980. So that is why, so we're going to put that here. But that is why it's separate after you total up your total current assets here, which is with your cash, accounts receivable, supplies. There could be other things listed here as well if there was additional information, but these are currently the current assets we have. So the total for those 3 all added together is going to be $21,860 total. So as I said, and this actually can go here. This will make it a little easier because this is actually how it's written inside of the sheet. So as a result, this current assets here is going to be the 21,860. The equipment here is 4,980. So the total assets are going to be this 21,860 plus this 4,980. It's just going to be easier for you guys to see this way. Okay. So this 4,980. So your total assets here is going to be these two numbers added together, which is going to be $26,840 is the answer that we're going to get here. So then from here, so this total assets number here is that important piece of information that we need. to then go through, and this is a number that we will use here later. From there, since you have covered all of the total assets, you will move on to liabilities and stockholders' equity. Underneath liabilities and stockholders' equity, same thing here where we started with current assets, we're actually going to start with current liabilities. So again, these are actually things that we're getting that we're going to owe within the next year. So current liabilities on this. Okay, so current liabilities here are going to be first thing we're going to see here is going to be accounts payable, so which we are going to find here. So here we see liabilities here. Current liabilities here are accounts payable. So as this is the only thing current here under liabilities in the information that we're given. So as we go back here, the current liabilities that we are given is the total of all of these. So we would take the $3,250 minus the $1,800 plus $360. As a result of that, our accounts payable is going to be $1,800. Excuse me. After that, we're going to go to, as a result, we're going to look back here and see if there's anything else that we see that fits within the current liability standpoint. And as you can see here, as I described, accounts payable here is the only piece of information that is current for a current liability. So here, now we're going to move over to the final portion of this equation, which is the stockholders' equity, because liabilities plus stockholders' equity is going to give us the same amount that we did here in the assets, as long as we do everything right. So we can see here that stockholders' equity is accompanies in a few different things: common stock, and then and retained earnings, which we already got the answer for the retained earnings from our retained earnings statement. So we are going to take common stock, and that's the $21,400, and that piece is going to go right here for $21,400. Okay, so from there, what we're going to do is find that here we do know the retained earnings portion, and the retained earning portion is the same answer that we got here, which is the $3,630. And from there, we can take the stockholders' equity, which includes the common stock and the retained earnings, in order to get a total stockholders' equity here. By adding these two pieces of information here, the common stock and retained earnings, which will get us an answer of $25,030. Lastly, we are going to figure out here if our number here matches up with the number here. So what we're going to do here, this number should actually be over here because that's how it's written in equations. So, and the same with this number for formatting sake. So what you're going to do is, since this is the total of these two things are the total of this number, and this is the total of current liabilities, we're going to add these two numbers together, and which is going to give us the total for liabilities and stockholders' equity. And the whole goal is that it will equal the same number. So what we've got here is actually the same number of $26,840. So as you can see here, we were able to find the information that we needed with the information provided through this information tab here, which is fantastic, and use that information to fill out each of these required sheets here along the way in order to get to what our total balances will be from the perspective of the sheet. So that is that. Okay, so I just wanted to thank you so much for taking the time to go over this exercise 5 with me. And if you have any questions, please feel free to ask them in the comments below, and I would be happy to answer them. Thank you.